Welcome back to Fin Talk with Anil. We are on day 12 of 30 days, 30 financial topics. And just yesterday for day 11, we have started reading out this such a nice article by Mr. Francis and Mr. Vishal, which kind of describes 29 different investment plans for you. Do check out that video on the link above. So let's continue our discussion from yesterday and discuss some more points or some more plans out there, which is like a senior citizen savings scheme.
Senior citizen savings scheme. So if you're someone who has retired, if you got that lump sum money, then why not just invest them in a good secure savings schemes where it is kind of where you kind of get a little more advantage being a senior citizen from the banks to on the returns and RBI taxable bonds, etc. And national pension scheme. Okay, we have done a topic over that. Life insurance, I just told you, take a life insurance, play safe. It also gives you kind of an assurance for people who relied on you. That's a good one, right? I myself have a good LIC policy. NSC's National Savings Certificate. This is something again related to the government bonds, equity linked savings schemes. This is let us cut the chase. This is a mutual fund where your funds are the fund managers basically invest these funds into eligible investments where you get a good 1,50,000 benefit under section 80C and sovereign gold bonds. Okay, gold bonds are kind of a gold investment, but then this is interesting where nowadays you might have heard or gone through definitely the gold, digital gold investments. Yeah, this is typically like commodity trading. Let us say you buy a gold bond at a particular rate today, which you don't get a gold, but let us call it a bond typically which is sort of a gold where you want to sell that gold bond back at a particular time, then you will be given the value of that day where the gold is trading. Yeah, so yep, this is a good one. Monthly income plans. Yep. So let us combine this with if you are a senior citizen, you have a lump sum amount from the retirement fund, then yeah, you can invest into these kind of funds where they kind of manage it by investing into different bonds and or securities, minimizing the risk, and voila, you have your stable monthly return just like you are working, right? So, employee provident fund, we have seen that Atal Pension Yojana, this also qualifies for, let us say, under the ATC 1,50,000. If you're opting for a old tax regime, of course, under the scheme, subscribers get a guaranteed minimum pension of 1,000, 2,000, or 3,000, or 4,000, or 5,000, basing on, I presume this is basing on the amount you are going to, you know, subscribe for, yeah, or invest. Okay, moving on. Sukanya Samruddhi Yojana. This is definitely for the girl child. If you have a girl child or a newly born baby girl in the family, then why not do tax schemes? So this is something you do let me know if you want more about that. Recurring deposits, we all heard that it's typically like a fixed deposit, but then where you do on a month-on-month deposit, so you can arrive at a fixed deposit, but then all you get the advantage here is the interest, not a unit or market fluctuations. Yeah, corporate bonds, I told you again, it's coming back. The real estate investment trusts. Okay, so there are trusts who like mutual fund trusts. real estate investment trusts are typically those who majorly focus on real estate. So you they pool your fund, they pool a fund from many people. Let us say if you are a normie like me, and then you want to take the advantage of growing land prices in Bangalore, but then the capital you have, you can't even buy a piece of land, right? So when these funds, these trusts kind of gather around this kind of people, and take funds from them, and invest in the land as a pool, and then do the real estate business in return for you, give you the profit or distribute the profit among the trustees. Yeah. So voluntary provident fund, again, this is something like a PPF, or public provident fund, where you voluntarily contribute your mm, share for a better retirement pension schemes. Yeah. Uh, Kishan Vikas Yojana, this is again a government scheme to give you a better return or a secured return for basically by the name, I presume this is designed for uh, farmers. And then silver ETFs. Okay. I understand, or let us take it as the gold bonds. These are typically backed by the silver interest instead of gold. Treasury bills. Okay. Treasury bills, I understand these are all again the same way of government bonds, which you get it, right? So, wow, just reading it through just took us 20 minutes. And do let me know if you want to have a detailed discussion on any of these topics. We can have a we can kind of create a whole video and unfold those benefits, not benefits, uh, etc. Yeah. So this article continues. Then yeah, so this article continues. Let us see what are the things you need to keep in mind before you choose a best investment plan for you. So understand your financial goals. That is important. Like I said, if you want to buy a Porsche, yeah, why not? Right? Access your risk tolerance. But then let us talk about me. I want a Porsche, but I definitely can't invest all of that. I have EMIs to pay. So you have to access your risk. You can't go out all out and invest all your money in your mutual funds and say, okay, I'm cool, right? Consider your time horizon. So it is also important that if you are 30 years old, 28 years old, when would you want to ride your Porsche? You would definitely want to ride it by 40th, or if you are someone well doing well, then even earlier, right? So that is important to keep in mind. The time frame, do your research. Like I said, 29 options, guys, even more out there. So find out what's best suitable for you and your dream. Like we started, don't put all your eggs in one basket. Invest in a different classes like stocks, bonds, real estate, gold, etc., etc. Take some professional guidance. That is important. If you are someone who's puzzled, or have a limited knowledge on finances and options, then why not ask a professional who can guide you better, right, in the same directions, or who can craft the right plan for you. So, costs and fees are some charges which are associated with the financial plans which you want to review, and some monitor and adjust regularly. Now, that is something, if you have planned something 5 years ago and you have been investing, you can turn a kind of a blind eye, right? If you, let us say, the markets are doing great nowadays, and if your plan 5 years ago has a subsequent amount of investment into secured funds, then it's the right time to reallocate those funds and take the best advantage of the growing markets, right? So do let me know what you think about this, and do let me know what you want to hear later. So that is all for today. Thank you so much for watching. See you all tomorrow. Bye bye.